Hi, I'm Tim from Sonnet, the money-saving chartered certified accountants. This time we're going to look at electric cars. There are big tax differences between electric cars and regular fueled cars, and the government are doing that because they are lower on emissions than CO2 emissions. But cars and tax are a complete minefield. So is there a big difference? Is it worth bearing in mind when you buy your next car? So the purpose of this video, we're going to look at £20,000 car and compare a gas guzzler versus an electric car. Big health warning though, tax law is constantly changing, especially with cars, and it's different for each personal circumstances, so make sure you take advice, especially in this regard when you're making a decision. So we're going to look at VAT, we're going to look at fuel duty, we're going to look at vehicle excise duty, we're going to look at the business taxes including benefits in kind. VAT, when you purchase a car, regardless of the fuel type, there is no difference, it's 20%. However, when you fill the car up or fuel your car, then it's 20% on regular fuels like petrol and diesel. It's 5% if you charge your electric car at home. Fuel duty, that's 60 pence in the litre, is an additional fuel duty. Most of what you pay at the petrol forecourt is tax, whereas with an electric car there is no fuel duty, it's zero. A vehicle excise duty, what most people would call road tax. Well, if your car was registered before the 31st of March 2017, you're paying £555 a year for the biggest gas guzzler, as opposed to free for the electric car. If you buy your car now, then you're looking at paying a £2,000 first year rate, roughly, and then £140 a year thereafter, as opposed to free for an electric car. Business taxes, you can claim the cost of an asset off your taxable profit, but you have to spread it over a certain period of time. With cars, that is a long time. £20,000 gas guzzler, you can claim £1,600 in the first year, £1,472 in the second year, £1,354 in the third year. As you can see, it's going to take a long time. In fact, you'll probably sell the car before you claim capital allowances in the normal way. With an electric car, you can claim the £20,000 off your taxable profit in the first year, straight off, boom. So benefit in kinds, this is when you, instead of receiving cash, you receive a benefit like a car or the fuel in the car. Now we're going to assume you're getting both and that you are an additional rate taxpayer, the highest rate of tax. For this £20,000 gas guzzler, you're looking at paying £7,000 a year in tax personally. You pay for the car in less than 3 years in tax. Whereas electric car currently is about £1,200 in 2020, that's going down to £200. If you're a standard rate taxpayer, you can half all of those numbers and you can see the difference. For the company, you're looking at paying £2,200 in tax for the gas guzzler, as opposed to £360 in tax or £55 in tax in 2020. Now, if you've got an owner managed business, then you've got to consider both of those taxes. And yes, if you get it wrong, you're going to be paying for the car again in tax in just over 2 years. Get it right, and you can claim your first year allowance and very little tax after that from a benefit in kind point of view. For vans, there's not that much difference in tax, and the benefit's actually going to get worse over the next couple of years, but they're already in a very good tax position because they're not viewed as a personal benefit in the same way as a car. If you own the car yourself and you're claiming the mileage, 45p a mile, first 10,000 miles, then it's the same for electric cars and regular cars. So it's the effective cost of the fuel and the benefit that you'll be getting there, which is always a good thing. Now, these are two extreme examples, but you can see the difference. It is quite a difference. Cars are complicated, though. If you're buying a Tesla Model S at £70,000, it's a bit different. But remember, also, tax is just one element. The initial cost, the purpose of the vehicle, every business is different and individual, so bear that in mind as well. But if you want us to do the sums from a tax point of view, when you've got a couple of cars in mind, then let us know. It could save you large. So we've looked at some of the taxes that affect cars with a specific focus on electric cars. If your accountant doesn't give you that sort of advice, then come and speak to us. We can help your accountant work smarter, or we can be your accountant. We'd love that to be the case. But remember, if you like this tip, click like on social media and share it and all of those things. It benefits us and it benefits you. And if you want to know more, please just drop me a line, email, telephone. It's free for a quick chat. Remember, you can find more on the website, sonitaccountants.co.uk, and on the various social media platforms. Follow us, subscribe to us. But for now, thanks for watching. This is Tim Burton from Sonnet, the money-saving, chartered certified accountants.